What's going to all my people out there in, I don't know what you call it, the internet world, YouTube land, however you want to call it? What we're going to talk about really quickly is this concept of Jay Morrison scamming so many people. And I'm going to kind of come from the angle of Jay Morrison probably didn't scam you. In my opinion, you probably scammed yourself. And we're going to kind of talk about what I mean by that and what are some solutions. So if you ended up in this situation, if you go look at the Better Business Bureau for the Tulsa Real Estate Fund, there's a lot of people on that particular page that are very upset. What you can do to make sure that you don't end up in this position a second, third time, because I can create a hypothesis that, or maybe create a theory that if you got on the wrong side of this Tulsa deal, it's not the first time something like this has happened to you. And the question I would ask you is that, do you want to get off this hamster wheel of being in these type of situations by actually learning how not to be in these type of situations, by really understanding what's going on around you? Or do you just enjoy being in these situations? I learned from this guy that made a lot of money in the markets in the 70s, doing something called being trend-based. He said that a lot of people, they want to be broke so bad, they'll do anything to accomplish that goal. So he says it really doesn't matter what you teach people. If they're very determined to be broke, they'll lose all their money just to make themselves right. And so that's something that you kind of want to understand. And we're going to kind of talk about that, to where many people that may have found themselves on a bad end of this deal, we're not blaming them. We're not doing what we call victim shaming. But I would ask them, is this the first time that you've got in this situation? Is it the last time you're going to get in this situation? And if it is, what are you going to do about it? Like, what are you going to change about your life and how you perceive things? And you're educating yourself and understanding to where you don't stay in this hamster wheel of these type of deals, right? However, in my opinion, there's a larger context here, because me being in the markets for a relatively short amount of time compared to a lot of people that are a lot older than me. I know a guy that I'm trying to get mentoring from. He's been trading for 30 years. But me being in it longer than the average person, and me telling people, if you read about the markets for 6 months, you'll be 90% ahead of the majority of the population. I realized how many people have no market understanding, regardless of their formalized education, because many people, your formal education is not designed to give you that type of understanding. Therefore, you're out here in the world and you're conducting yourself in markets, but you don't really understand how markets work. And when people try to attempt to teach you how markets work to make you more effective, because that's not interesting to you, you don't adhere to the teachings. And then you put yourself in a negative position, but you often don't want to blame your lack of understanding around the issue. If I can't read something, it's my inability to read. It's not the person that created the content. So then what I need to do is go and continue to study and learn, what am I being presented with, so I can function in my environment. But because there's so many people that have decided that we're not going to continue to further ourselves from an understanding standpoint, not an education standpoint, really from a training standpoint, they end up in these situations and then they're able to, get their anger directed at a person like Jay Morrison. But if you were paying attention to me and what I was talking about, you probably wouldn't have got in this situation, because you could have been able to do exactly what we're going to do in this video. And so one thing I've learned over time is that many people get burnt out on trying to educate certain people, because you're fighting people to educate them, right? And there's really more money and there's more success in educating the people that actually want to be educated. So sometimes what you will find is that your heart can get hardened, because you see the people that most need the help. But when you offer them the help, they don't value the help. And we're going to talk about again is that I know a guy that's made a lot of money in the markets, and he says that there's some people that want to be broke and they'll do anything to make themselves right in that situation. So it doesn't matter what you try to do to help them. It's like you got some people, they don't ever want to get good health. So it doesn't matter what health information you give them, they're going to continue to eat bad food and not exercise, because they really like being in bad health. They enjoy it. Some people will do drugs until they decide they don't want to do drugs. And there's really nothing you can do about that. They have to make those decisions. So one of the things that we try to do here is put people in positions to where they can function in markets properly. Because something that Corey Camp taught me, and he's 100% correct, is that many of us fall victim because we don't understand language. So what people do is they sit around us and they have conversations right in front of us, and they hot button us. And because we don't understand language, right, we fall victim to what they're trying to do because we don't understand language. Once you understand language, a lot of stuff these people are talking, you realize it doesn't make sense. It don't matter where they come from, because you understand what the words they mean actually mean, and you understand them in context. They're not some made up words that some, internet communities have created. And so that's something that I try to help people understand, is that you can function in multiple areas now because you understand the language of that particular environment. So then therefore, when you go into that environment and the people are talking around you, you understand what they're saying and you understand what these words actually mean. They don't have this advantage over you because you don't understand language. And that's a big issue for a lot of people, is we don't really understand what these words really mean from a practical and from a contextual standpoint. So what Jay Morrison is falling victim to was that he went after an audience of a lot of people that really don't understand how markets actually function, right? And so when you ask them to give a market analysis of what's going on, they can't, right? But those were the only people that were good candidates for what he was doing. So he understands that there was a population of people that really don't understand how markets function. In real life, they really don't. And so they won't even know what questions to ask around what I'm doing to where they can make an informed decision. You understand what I'm trying to talk about? So when this stuff gets presented to the people, because it was a crowd fund, right? So when he goes to the crowd, right, to do the crowd fund, they can't even ask the right questions. So many people ask questions, but you're asking the wrong question. But you think you're asking a very important question because you're asking a question from you just being totally ignorant around the situation. One thing you got to learn about education is that you have to become competent enough to know how incompetent you are. So one of the things that I've been successful in helping people understand is that when you come into the markets, it may take 6 months to a year for you to even realize what you don't know. So I'm not really helping somebody by just selling you a course and walking away, because it can take 6 months to a year for you to realize, I don't even know this. I'm so ignorant around this. I'm just starting to realize how much I don't know. And one part of learning is realizing how much you don't know. Learning and then realizing, okay, I don't know this. And then learning and then realizing I don't know this. And then realizing is that learning goes on to the day you pass. It never stops. But many people are content with just being ignorant of the environment around them because they have all the creature comforts. That's how the society has been developed. They built this society developed to make you happy being ignorant. Because why? You're not by yourself. So people are able to come into your environment and present things to you, and you don't even know what questions to ask around the situation. Because why? You're totally ignorant, or you're totally dependent upon somebody else to give you all the answers, but you don't even know what they're telling you. So either way, you're ignorant. So I think that's something that people really need to examine. And so again, where is the market analysis around what this guy did? There is none. You're going to get one today, but I'm going to be the few people that actually can give you one. So that's what I want people to understand, is that when you don't understand how markets function, and then you go into market-based scenarios, it's going to be very difficult for you to be successful because you actually don't understand how markets function. Ms. Cherie from, I think Black Women Makes Money, which is a black women-centric channel, right? That's what she's doing right now. And there's nothing wrong with it. That's what she chooses to do. But she did a video a few weeks ago where she explained, if you're doing a real estate investment deal, here's how the deal needs to be structured from her experience doing these type of deals, right? So Cherie understands, because she comes out of the capital space, how the deals need to be structured. It's not just you give the deal to Cherie and she tells you. She can actually teach you how to structure these deals properly. And so I think that's something that a lot of people struggle with, is that they're at a stage in their family's development, and for some reason they think they're at a stage that they're not at, and we're going to talk about that. Many of you listening to this particular video, whether you want to admit it or not, you're at stage 1 of family development, which means what? Somebody in your family is going to have to make the decision, or some group in your family is going to have to make the decision that what we're going to do is we're going to get our family out of stage 1 financially. And many people have never made, no one in your family has made that decision. So you think you're in a financial position that you're not in, where I can hand my money to somebody, like I have a hedge fund manager and they run my money for me. I know a guy that's a CTA, which is essentially a form of a hedge fund. He manages around $10 million. right? Well, the people that gave him the $10 million to run money for, they're not at stage one of family development because they're hands off. They're a passive investor. He trades the futures markets for them, and they give him money on behalf of that. They're not at stage one family development. These people have gotten to a certain stage of their family development financially where it makes sense for them to do those type of things. If you're not at that stage, I don't know why you're involved in this type of stuff. You need to be doing more active things to build up your understanding and experience in this particular space so the next generation can be more passive. But a lot of people don't want to do that. Why? Because they don't want to do the work. So we're going to kind of talk about this particular deal, how it was promoted. In my opinion, because I think, in my opinion, and I said this before, is that Jay is taking heat that he shouldn't be taking, right? Because of people not really understanding how markets actually function, right? So he's getting blamed for stuff that's really not his fault. And what he really should be getting asked about, the people that are doing all the content, they don't even know how to ask that kind of question because they don't understand how markets function. So it's just a very weird deal. Ever since I've been observing this, has been very weird that anybody that's very critical of this guy, they can't really sit down and give a market-based analysis of the actual fund and the environment that it operates in. It's everything else, which has nothing to do with the fund, right? And so that's kind of what we're going to go into, because I would not have promoted it the way he promoted it, but he is a better marketer than me. Jay is a charismatic personality, which makes him a better marketer than me, right? So he understood what he needed to do to raise 11, 12, 14 million dollars. I can't raise 11, 12, 14 million dollars. So he knows how to do something I don't know how to do, but I would not have marketed the way he marketed, which means I would not have gotten the pushback that he got, right? And so let's going to go here. We're going to watch 2 quick videos in which they're going to introduce the fund, what it's about. And he's going to talk with somebody else, I think, that operates out of the Atlanta metro area, is another real estate guy. And they're going to give some more understanding of the fund and what they're talking about, because I think a lot of people, because of the way it was marketed, they got a perception of the fund that had nothing to do with what the actual paperwork said. And we're going to kind of go into that. So let's go with these videos real quick.
Of economic erosion, where many properties are left desolate, unsafe, or even vacant for extended periods of time, mainly due to practices such as redlining, mortgage discrimination, blockbusting, deindustrialization, and economic disinvestment from the public and private sector. In addition, studies show that vacant properties in a neighborhood are correlated to increased violence and criminal activity. The most common method of economic revitalization that occurs in most of these communities is called gentrification. This is where members of a more affluent community pool public and private resources in order to make investments into poorer areas, forcing some of the most economically vulnerable members to move away. In the end, the community loses its identity, culture, and history, while the problems of poverty, lack of economic resources, or quality education still exist for the displaced. Tulsa Real Estate Fund is an SEC-registered, Regulation A+ Tier 2 economic vehicle for urban communities to collectively pool their dollars and gain control over the revitalization of their own neighborhoods. Due to a new SEC regulation, for the first time, members of the community can invest as low as $500 into a real estate crowd fund and become part owners of all types of real estate investments, such as hotels, apartment buildings, schools, hospitals, and even large blocks of single or multifamily homes. Here's how it works. Tulsa Real Estate Fund will collect capital from a pool of socially conscious investors, then search for quality real estate investment opportunities in economically depressed neighborhoods, purchasing properties to be fixed up and either sold or held onto for rental income. As the properties make payments and or increase in value, the fund participants as co-owners of the portfolio of investments will receive an 8% preferred return and a 50-50 split of the remaining profits with the fund managers.
Okay, so that's the first thing. Him talking about that 8% preferred return and the 50-50 split. So now the first thing I want to ask the audience, what does a preferred return mean? When somebody says, I'm going to give you an X amount percentage of preferred return, what does that actually mean? Then a 50-50 profit split. And so now we're getting into where I think he kind of went wrong with advertising the fund, right? With those numbers, because I think that's what people heard. And so they think they're getting 8% return back on their capital, right? And so I think that's kind of where things got off the rails, right? So we get all the front load about the vision state. There's nothing wrong with that. People buy into visions. People buy into big ideas because they don't have any ideas. So they buy into big ideas from other people. There's nothing wrong with that because you can't get anything accomplished in this world by yourself. So you need buy-in from other people. But I think once we got into people thinking that we're going to get 8% and 50-50 profit split is where we kind of got off the rails. Let's get to the rest of the video.
In addition to receiving the return on their capital, the Tulsa Fund real estate investor will have had the opportunity to create jobs in their community, participate in neighborhood improvements, positively impact local public spending, all the while creating a new legacy of ownership and financial investment. We welcome you to explore this innovative 21st century economic solution.
Okay, so that's pretty much the deal. That's the big vision, the big idea that where we're going to try to stop gentrification. You have a opportunity to be part of this larger mission, providing jobs, helping the people in your community, because they are 100% correct. A lot of urban areas, what people call urban or black areas, are being gentrified at a very rapid rate. You see this in Metro Atlanta. You see this pretty much in every large urban area. There's been a move over the past 20 years from people from the suburbs to move back into the inner cities. So that land that at one time was considered of very little to no value, right, is now considered extremely, extremely valuable. And so that's what I want people to understand is we just had to ban a person because they couldn't make a market-based narrative. And so we're going to continue to talk about that. The lack of being able to understand things from a market standpoint is what's defeating you. Jay Morrison's not defeating you. And so until you can kind of break out of this, you're like it's a trance that you're in. And I don't know what you need to do to break out of it. There's a woman I know out of VA, subconscious therapy. She may be able to help you. But you're very much in a trance to where when information's presented to you, you get triggered, you react, and your reaction has nothing to do with the information that's being presented. It's just you've been triggered. Amos Wilson got us to understand that many of us are operating under that Pavlov dog theory, where they taught the dog every time we ring the bell, we're going to feed you. So they ring the bell and they feed the dog. And they ring the bell and they feed the dog. And they ring the bell and they feed the dog. And then what happens is they ring the bell and the dog has been programmed to believe that it's going to get fed every time the bell rings. But this time they don't feed the dog, but the dog starts to salivate. It's been triggered and been taught that the bell means you're going to get food. And so many of us have been so programmed by the system that we get triggered just by people presenting certain things to us. But what we're reacting to and what we're speaking about has nothing to do with the content. And then we wonder why we're not really effective in our environments is because we've been programmed to do this. And it's been programmed by the people that created this environment. And so their job is to make sure that you are ineffective because why? They created the program that you're operating under. So I really want to encourage you to really work on that, right? Work on the stuff that you're reacting to and then really observe your reaction. Am I reacting to this in a way that is appropriate to the situation, or am I just emoting? Because you're emoting, especially if you're a man, it's not helping us. We can't build off of that. I'm not saying that you can't show any emotion, but you're emoting around a situation that has very little to do with what we are trying to currently do right now. It is no help to us, right? So I just really want you to kind of understand that. Let's get back to the content, right? Because we really got to kind of observe our behavior in certain environments and stop looking at other people and saying, well, how come this? And we ask ourselves, what are we contributing to the situation by how we're conducting ourselves, especially from an emotional standpoint? So you got to realize is that when he puts this information out here in front of the people, because we don't understand markets, we go for it without being able to actually question him around what is going on. So is that his fault, or is that the fault of people not being really informed around what they're doing and then them taking advantage of something and not really know what's going on? So for the people that want to get upset about something, I have something that you should really get upset about, right? But I haven't programmed you to get upset over this, right? But this is something you really should get upset about. So the first question you want to ask yourself is that, what is the number one answer you should know before you invest in any security, asset, deal, etc.? Right? You should know this. right? What is the number one answer you should know before you invest in any security, asset deal, etc.? So if you want to get upset about something, you should get upset that you don't know that answer. You may think you know it. You may repeat what somebody else told you, but every savvy manager of capital knows that answer, right? What's the number one answer you should know before you invest in any security, asset, or deal? You should already know that. And then every investment should work off that framework, right? And these are just the fundamentals of finance. These are so this is what I'm saying. This is a fundamental of any finance. So anytime you go into any market environment, you should already know that answer. And then that answer governs how you conduct yourself in that environment. You understand what I'm trying to tell you? So if you can get the right answer, I'll cash app you $5, right? But this is the foundation of all financial behavior in any marketplace, from savvy people and unsavvy people. They just get taken advantage of because they don't know this answer. Okay, let's go to the next video in which he's talking. He kind of answers some questions around the fund, but we see how it was promoted. It's promoted as an anti-gentrification play, right? It was promotion. It was promoted as a way for people to take back their neighborhoods. Okay, that's cool because he's creating a narrative around the fund. Now, all funds have narrative. We just saw last week the guy Vivek take an ETF, fill it full of oil companies, and say it was an anti-ESG play, right? So he didn't say, well, I just got a collection of oil companies. He said, this is an anti-ESG play. So you got to realize that this is not abnormal behavior in any market. It's not abnormal to create a fund or to create a vehicle and to create a vision statement for it that makes it seem as if we're doing something that's bigger than just trying to get a return on capital. That's not abnormal. And if you really study the markets, you'll see this over and over again. But for people that don't study markets, they just study the hottest story on the internet, what this person did, then they get in these environments and they start thinking this behavior is abnormal. No, it's very normal behavior, right? Because if it's just a real estate play, well, what's the difference between this real estate play and every other real estate play in the world? We got to create a vision statement and a narrative around this to make you think this is different. Because if it's not, then it's just another real estate play. So what makes this real estate play different? So you got to kind of understand that this is where lack of exposure to markets, lack of understanding finance, while you're living in the United States of America, one of the most highly developed markets in the whole world, this is really the biggest consumer market in the world. This is also the biggest consumer market in the world that your people built, that you have no idea how to operate in. So I want you to understand that. This is the largest consumer market in the history of the whole world that your people built that you have no idea how to operate in. So you do everything else except operate in this particular market as a savvy person, and it's the same market that your people built. Without your people's contribution, you don't have this market. But then when we talk about the market, everybody goes quiet or they try to direct the conversation to something else because the goal of this system was to make your people build the largest market in the history of the world, but then you don't have no idea how to participate in it. And you're agreeing with that. You're on board with it, right? So that's why you end up in these particular situations. Okay, so let's go to the next video.
Sure.
Does preferred mean guaranteed?
Listen, right, that's one of the most profound questions,
Isn't it?
Preferred return means it's preferred, meaning it comes first before the 50-50 profit splits. Preferred is not a guaranteed return. Actually, it would be uncompliant. I wouldn't pass regulations and would be in all intents and purposes illegal for me to be a fund manager of an SEC regulated fund and tell you I would guarantee. They would more than smack me on the wrist. So that's a great part about these regulations. And what we've seen, I talked about it last night, so many people who've never filed for SEC compliance, never actually even tried to establish a fund, have other knowledge base of entrepreneurship and other funding opportunities. So they think it's that. And so they're using their limited knowledge to talk about this specified knowledge and the specified regulation and saying, hey, that's not how it's done, but you haven't done the research because you haven't been where I've been or done what I've done. So in this space, there are no guarantees. As a fund manager, we have to, that's with any private placement memorandum, we have to notify you of all the risk first. So when we say this is a heavy risk, you can lose all your money, this is a risky investment. It's not that I really want to say that. It's that I have to say that by compliance. I have to tell you that it's the most risky thing in the world, and beware. And so that's all part of SEC compliance. It's almost to scare the everyday investor away and make sure that they're truly ready for this investment opportunity. But there are no guarantees, but there is an 8% preferred return before our 50-50 profit split.
Before the fund makes any money,
Correct.
the investors get paid first.
Yes.
They get a
The fund,
return.
I want to be very transparent. The fund gets a 5.5% management fee off the top, right? So that management fee covers the fund's operations to manage the company effectively, right? There would be no fund if there was no management, if there were no operations, if there were no marketing, if there were no auditing, if there was no treasury department, if there were no CPOs, if there were no CPAs, if there were no attorneys. All these things are needed in order to manage and run the fund, as well as the initial investment over the last 2.5 years of several staff members, including myself, to pour into creating this opportunity and making it a real thing. So the fund managers get a 5.5% management fee, but there are no profits on the deals split until the crowd gets at least an 8% return on their investment.
So let me break that down for us normal people, right?
Do it.
Normal. When you're investing, there's always a chance of losing,
Always.
but there's also a chance of winning.
True.
And so if you're looking for something where you don't have a chance of losing, you need to let us know what that is.
Right.
I mean, honestly, and I get people saying, what if we lose? But what if you put money in stocks and they go, whatever?
What if your 401k goes bankrupt?
Right. So I want the people that are asking me those questions to understand there is a chance, right? But we're going to talk about why it's a very minimized chance, in my opinion.
I can't say that.
He can't say it. I can, right? And the reason why I say that is just because of how it's set up, the selection team and the projects that are going to be selected. But I want you to talk about that. How are you selecting, or how is the fund selecting properties? How are properties or projects or development? What makes us select the right one that we think will be the right one?
So outside of my 12 years of experience in real estate development, I've managed 2 mortgage companies. I've been a realtor from the streets of Newark, New Jersey, all the way to the richest town in America, Alpine, New Jersey, as a celebrity realtor, first African man in America hired by Prominent Properties, Sotheby's Realty. And so I use all my years of experience in building businesses, understanding real estate and prowess to make sure that we're vetting deals properly. But I'm smart enough to know I don't know everything. And so what we're doing is partnering with very talented, experienced folks like yourself, Chantel Owens, other developers, investors, and specialists throughout the country to do what they do best. And where Tulsa Fund could be a support system for our community, developers, and investors. I'm not looking to be the largest real estate developer in the country, not even on my top 10 of my aspiration list. My goal is to be the best fund manager, the best fiduciary and steward of this fund, and to be able to galvanize our people to have an economic vehicle, utilize it with integrity and responsibly, and give us something we never had. And then go to Ramon and say, all right, and we're building out this massive advisory team and advisory board. So Ramon's specialty is apartment buildings or flips. We want you to head and be the voice of reason on that. If Chantel can do tax liens, we want her to spearhead the tax lien division. If there's someone, I just talked to David Anderson, who has some experience in hospitality and lodging and hotel space. We want you to do that. And if your niche is Atlanta, and we focus on your expertise for Atlanta. If you're in Detroit or Chicago or New Orleans or LA or Newark, New Jersey, and you have a resume and a track record and a heart and mind for the people, then we want to invite you in to be an expert, an advisory board member, or a vetting team member with us. And so we have an acquisitions team, we have an underwriting team, and we have a portfolio management team. All these things will help to protect our investment and make sure that, and I understand people's concerns with their investments. We have to all understand we all have investment in this. I myself, outside of being the manager, have invested $10,000 into the actual fund, right? Through the J. Morrison Academy. Our company's invested $10,000 into the fund. All the upfront risk of what we put to make this all happen. We didn't make this happen for it to fail or be irresponsible.
It didn't happen overnight.
Talking about over 2.5 years of research, development, time, treasure, and energy to pull all this together.
Okay, so they kind of broke down some of the details of the fund. Now, I don't know if people missed this video. This video is probably like 5 years old now. But what I want you to understand is that, and we're kind of done with the video, so I can take these headphones off, is that often the information is right in front of your face. And because you are distracted from what the actual information is, you don't even realize that they just gave you the information. Something Amos Wilson has educated me on is that many of us cannot sit down in a room and have discussions around things involving finance, and we can stay to the topic of the discussion. So when we start talking about, we can't put 5 of us in a room and we talk about trade policy. We can't put 5 of us in a room and we talk about particular deals going on right now. I told people, I'm not going to ask Lance to come on here and talk about macro and 5 people going to watch. So we continue to fall victim to things when the information is being presented, but because we don't like the way to which the information is being presented to us, we now jump to something else. Because in the real finance space, if you're really going to sit down and you're going to talk about money, nobody's trying to mix entertainment and information with you, right? So if I'm going to talk to a bank about getting me a loan, the bank's not there to entertain me. So as soon as you say the information has to be entertainment, and it got to be 80% entertainment and 20% information to get my attention, well, you've just shown yourself not to be qualified for the attention, because you should be able to say, you know what? I'm going to take 2 hours out of my day and I'm going to just lock in and learn this information so I can be more effective in my environment, instead of everything got to be entertainment. So once again, this is why these things happen. Because the man is telling you in the video, and we're going to go into more things, what is the actual details of what's going on. But don't want to hear that, right? Because at that time, something else is more interesting. Now, the question I want to ask you really quickly before we get to it, right, is, does Jay have the right to promote his offer the same way Kathy Wood does? What's the difference between Jay promoting his offer and Kathy Wood promoting her offer? And if you know who Kathy Wood is, you know she's a woman. She promotes a lot of stuff, to me, I would think would be very speculative. But nobody's ever told her she don't have a right to promote it. Here's an article from the Financial Post, March 9th, 2023, right? Kathy Wood's ARK Investment Management LLC has earned more than $300 million in fees since it started 9 years ago. $300 million in fees since it started 9 years ago, while wiping out almost $10 billion of investors' cash in the same period, right? ARK has earned more than 70% of US $310 million in fees, right? This year brought an average roughly $230,000 in fees a day, as ARK value slightly recovered, rising by a quarter. So over 9 years, she got $300 million out of this particular deal, right? While wiping out almost $10 billion of investors' cash over that 9-year period. Okay. When you ask Kathy Wood to come on the screen, she's only coming on to promote her book. Kathy Wood's not coming on for any other reason. She's coming on the screen. When they say, Kathy Wood, do you want to come on? She's coming on to promote her book. When I say her book, what we mean in the finance space is what particular securities or investments comprise her fund. And she's coming to promote those. So she had all the Gen Tech plays. She was big on Tesla. She was big on Zoom. This is what she's doing, because she's differentiated her fund by saying we're going after emerging startup stage tech plays. A lot of stuff that a lot of people be scared to invest in. That's what we're going after. So she's coming on the screen to promote her book. She's not coming on the screen to promote anything else. Right? So you got to realize, why would Jay do anything different than Kathy Wood if he's trying to be a successful fund manager? Why wouldn't he promote his book? Why wouldn't he promote what he has going on? So you got to realize, like I said before, is that everything about you speaks that you're really not the right person to be in these spaces. So that's where, to me, Jay went wrong. The easy play was to go after people that really don't understand what's going on, right? Because they wouldn't even know what questions to ask. But then you get the most kickback from them, because why? They got into the deal for the wrong reason, right? They got into the deal for the wrong reason, even though all the information is presented, and what he did is not abnormal in the fund space. He didn't do anything abnormal. He put a narrative around his fund. He promoted his fund based on that narrative, and all he's doing is buying real estate. It's just a real estate deal. There's a million different types of real estate deals. Don't make his better, make his worse, but you can't promote it just as a real estate deal. So we got to talk about Black Wall Street, Tulsa, Oklahoma, gentrification, yada, yada, yada. The same way Kathy Wood wants you to believe that biotech or gen tech is the future. So you should invest now, because it's going to be what everybody's going to be doing in 20 years. Or Tesla's going to be $5,000 per share because of yada, yada, yada. Her job is to keep money coming in that fund. And she's going to promote her book. That's her job. She's a fund manager. Now, what we're getting ready to do is go into the particular prospectus. And we're actually going to go into the details of the fund, because one of the things that I've been successful in teaching people is to read documentation, which most people don't do. Now, how come most people don't do, right? I think in America, we have a lack of reading and reading comprehension. I think that's a big issue for a lot of people. And I think it's something that they need to really examine. They need to really examine that maybe I don't read and comprehend reading as well as I should. Right? Because I don't care that I read on a 12th grade level. To me, reading on a 12th grade level is baseline. Why? Because you're way out of 12th grade. If you're 30 years old, you're way out of 12th grade. So to me, reading on 12th grade level is baseline. Many people graduate high school and they're doing 8th grade work, but they got a high school diploma. So maybe if you got a college degree, you're doing 12th grade work. But I think a lot of people really need to focus on understanding their lack of reading and reading comprehension. They really need to work on that. Because what I want you to understand is that everything about this fund was put in print. Because he had to put it in print to actually register this with the SEC. Right? So he had to put everything in print. They had to disclose everything. And we're going to kind of go into that because I want people to understand that. Now, really quickly, this show is sponsored by www.thehighestpaid.online. And if you took this particular class and you went through the material, you would know how to evaluate these type of situations, right? Because that's what we teach you. So you learn how to manage capital property. You learn how to evaluate financial situations. You learn how markets actually function. So the money spent on the course will save you thousands of dollars over the course of your life. You just have to follow the instructions. But that's where we lose a lot of people. But I think a lot of people really need to examine their reading comprehension because in the finance space, the majority of content is in print. It's not in video. The finance space has not moved into the 2023 world where everything's on video. They're still putting out 300-page prospectus. And you just got to read them and go through every page of it. That's your job. Right? That's what they still do in this space. They're still operating like it's 1985. Because what are they trying to do? They're trying to eliminate anybody that's too lazy to read. Right? To make you understand you don't need to be here. Why? Because you don't want to read. So that's how we're going to get you out of this space. We're just going to put everything in print. So that's how they exempt the majority of the population. So I want you to look into www.thehighestpaid.online. We now have buy now, pay later offers. And I want you to go ahead and get into that because we continue to raise the price over time because the value of the content is really that important. Okay, let's keep going. So let's go into the prospectus, right? Here is something that they were saying, and you heard the Black PhD say this. You heard Jay say this. And we talk about them saying this is an SEC approved fund. Well, anybody that understands how the SEC operates know that that's not possible because why? The SEC does not approve or disapprove of anything, right? They don't do that. And so the SEC published this 2019. You should know that the filing does not mean the SEC has any way validated or approved the offering. Indeed, the SEC never approves an offering, right? So when you hear somebody say, I don't care if they got a PhD in financial history. I don't care that they have been certified by a marketing agency to promote themselves as being able to give you financial advice. The SEC, the way this actually works, does not approve of any offer. They may say, yeah, you met all the criteria to list this particular offer. You met the criteria based on these particular regulations to do this crowdfunding, but there is no SEC approval. It doesn't work that way. But when you don't know the market, somebody could tell you we're SEC approved and you don't even know what they're telling you because why? You don't understand the language. You don't understand the language. So then they're able to get your confidence, right? Whether they did that deliberately or they did that unintentionally, you don't know the difference either way because why? You don't even understand that the SEC doesn't approve anything. In fact, the SEC is probably one of the worst regulatory organizations inside the United States because the SEC allows Chinese companies that can't be audited by U.S. accountants to list in the U.S. So it's really not difficult to get something listed on the SEC. It's really not. The barrier is very, very low. You just have to do something wrong and get caught. But to list something, it's not that difficult. You got to be able to do the paperwork. Just pay some lawyers and they can get you listed. It's not that difficult. Now let's go into the actual document. Now, here's the document. Now you get it on sec.gov. Now, to the people that are watching, the 179, did you even know there's something called sec.gov that has all the documents for every company that's listed? And you can pull the documents and read, and they have to based on their filing obligations. Every so often, they have to file documents, 10Ks, 1Ks, whatever, annual reports. Did you even know they have to do that? So everything about companies is actually it's in print. You just got to go look it up, and it's free. You don't have to pay any money. You got to take the time to read it. So there's literally money to be made on sec.gov. You just have to be willing to go through sec.gov and find the money. But there's money to be made there. But when I want somebody to just give me the situation, right? And I think that somebody is going to just give it to me, well, you get what you get. Because nobody's going to just give it to you like that. You're going to pay some kind of way. So let's go into the prospectus, right? So highlighted. The transfer of interest is limited, right? So here's a particular fund, the interest. A member may assign his or her interest only a certain condition set forth in the operating agreement. Please see these conditions on the page 35. So what does that mean? You don't have the ability to transfer your interest except under certain conditions. They're telling you that up front. The company has been formed to acquire various real estate assets, single, multifamily, commercial, through urban neighborhoods in the U.S. They're telling you what they're doing. The company is considered an emerging growth company under Section 101A of the Jumpstart Our Business Startup Acts, as it is an issuer that has total annual gross revenues of less than $1 billion during its most recently completed fiscal year. Risk factors: emerging growth company with limited operating history. Subscribers will have limited control in our company with limited voting rights. The managing members will manage day-to-day operations. We may require additional financing. We have not conducted any revenue-generating activities and have not generated any revenue since inception. Our offering price is arbitrary and does not reflect the book value of our Class A interest. Our offering price is arbitrary and does not reflect the book value of our Class A interest. Our offering price is arbitrary and does not reflect the book value of our Class A interest. Investments in real estate and real estate assets are speculative and will be highly dependent upon the performance of the real estate market. Our independent auditors have expressed substantial doubt about our ability to continue as a going concern, and the independent auditors reported to the financial statements included in the offering. The companies are not currently owning the assets, right? And one thing you missed is that investments in real estate and real estate related assets are speculative, speculative, if I pronounce that correctly. My bad for the mispronunciation. But when people talk about the options market and they say that you're speculating, and I tell them anything you invest in is a speculation because there's no guarantee it's ever going to get a return. Right? And so that's what people have to understand, is that when you are trying to get a return on capital, what we call alpha, which is return greater than the market rate, everything is speculative. You're speculating on anything because there's no guarantee that you're going to get any return. The only guarantee in life is that you're going to die one day. Everything else is up in the air. So then that's why you have to understand what is the answer to the number one question around finance and markets that I need to ask myself before I go into any situation. Let's keep going. It's a speculative. That's how you pronounce it. Risk factors. General risk related to our business. Emerging growth company organized in 2016. We may never become profitable or generate any significant amount of revenues. Thus, potential investors have a high probability of losing their investment. We are significantly dependent upon Jay Morrison. The loss or unavailability of his services will have adverse effects on our business. We call that key man risk, which means the whole business is kind of based around one person. So one thing you got to understand, and I kind of talked about this on my Patreon. When you build a business that's not based on a system, but it's just based on the efforts of one person, if that person goes out tomorrow and gets hit by a car, there's no more business. So often when you're looking at businesses that people are looking to invest in, what they're often looking to invest in is a system, not 100% of the time, but they're often looking to invest in systems that are not dependent upon one person have to do all the business. Now, Jay may be like, I got to build a system, and I can get that because I live in the Atlanta metro area. If Mark Spain passes away, they still got a business because Mark Spain has a system. But Mark Spain's been doing business for a very long time, right? There's a guy, he's a big attorney out of Orlando. I remember when I was a kid, he used to see his commercials. The guy's a major big attorney in the Southeast now. called Mogens, Munz and Munz. He has a system. His son now is an attorney in the same firm. So if he passes away, the son just keeps running the business. But there's a system. So even if Mogens, Munz and Munz dies, the business keeps running because, wow, I got a system to run the business. But at this current stage, the business is very much dependent upon Jay Morrison and him operating in the business, him working in the business on a day-to-day level. Therefore, we want to kind of ask ourselves, is this worth investment based on currently where we're at in our life? It doesn't make it a bad investment. It means it may not be the best investment for us based on how it's set up. Let's keep going. You will not have the ability to evaluate our investments before we make them, which makes your investment more speculative. I think that's the correct pronunciation. Our manager will have complete control over the company and will make all decisions which members have no control. All investment in the interest is highly illiquid, which means that you can't move in and out, right? You may never be able to sell, otherwise dispose of your interest. Risk related to real estate business in general. Now, if you're investing in real estate, you should already know the risk related to the real estate gain. This is a real estate play. If you're investing in real estate, you should already be aware of all the risk related to investing in real estate. Why? Because that's the space that you're operating in. So why would you go into a space and invest money looking to get a return and you don't even understand how the space operates? Therefore, everybody that invested in this deal should be able to tell me what are the risks related to real estate, because they should know, because they're in a real estate deal, right? And I would encourage a person to maybe educate themselves on real estate before they started investing in real estate. Just get a basic education. You ain't got to go get a college degree. Just get a basic understanding of like how the real estate market works. What are some of the risks investing in real estate, right? Because there's risk investing in anything. Nothing's guaranteed. So to me, this should be a moot point for anybody that's in a real estate deal, but they got to put this here, right? So we keep going down. These are the real estate risks related to our corporate structure. We don't set aside funds in a sinking fund to pay distributions or to redeem the interest. So you must rely on our revenues from operations and other sources of funding for distributions and withdrawal requests. These sources may not be sufficient to meet these obligations. Now, what is a sinking fund? From Investopedia, a sinking fund is a fund containing money set aside to save to pay off a debt or bond. What are they telling you? We do not set aside funds in a sinking fund to pay distributions or redeem the interest. So you understand already their corporate structure, right? So then once you read that, again, does it allow you to answer the question that you should ask before you invest in anything? When they're telling you this is how our corporate structure is set up. Our ability to generate revenues from operations in the future is subject to general economic, financial, competitive, legislative, statutory, and other factors that are beyond our control. Moreover, we cannot assure you that we will have access to additional sources of liquidity if our cash from operations are not sufficient to fund distributions to you. You will have limited control over changes in our policies, operations, which increases the uncertainty and risk you face as a member. Our ability to make distributions to our members is subject to fluctuations in our financial performance, operating results, and capital improvement requirements, right? So currently our strategy includes paying a preferred return to investors in a return of approximately 8% annualized return on investment, of which there is no guarantee. In event of downturns in our operating results and anticipated capital improvements to our properties or other factors, we may be unable to declare or pay distributions to our members. The timing and amount of distributions are the sole discretion of our manager, who will consider, among other factors, financial performance, any debt service obligations, any debt covenants, taxable income, and capital expenditure requirements. We cannot assure you that we will generate sufficient cash in order to fund distributions. In my opinion, based on what we're reading this, is that distributions are going to be based on the discretion of the manager. So preferred doesn't mean anything. What it means is that the manager has to determine whether or not we have the liquidity to issue out returns. Now they say, well, it's going to be rolling 8%, which means that if we don't give it to you in this year, we roll it to the next year. But the challenge is that there is no set time in which, well, once we get to this particular year, it triggers all the returns and now we have to pay you out. So what you're being really told is that based on liquidity and based on how the manager sees a particular fund is operating, we will determine at this particular time whether or not we're going to pay you out. So preferred 8% doesn't mean anything based on what they're explaining to you in the document. So they can say preferred 8% all the time. They can say 50-50 profit split all the time. Doesn't mean anything, right? Everything is at the discretion of the manager, because what Jay is not going to do is bleed the fund out from liquidity just to pay distributions. And they told you that they're not keeping a sinking fund. Where I'm from, we call that a kitty. They're not going to keep a kitty, which is like what I call really a slush fund of capital to pay out distributions, because that could be taking money away from deals we might be trying to put on the table. So what Jay is trying to do, which is very smart, the same thing I do in my business. When you first start your business, what's the number one thing you don't want to do? You don't want to run out of money. You can't run out of money. So what he's done is created a way to keep the money in the company, because he can't run out of money. Because when you're starting something, your first few years is going to be really your worst years, and you're going to be the most vulnerable to running out of money. So you don't want to run out of money, right? So I think that's what people don't understand. It's all explained in the document. Doesn't make it a negative. It means that because you may not have the ability to answer the question that you should be asking before you go into any financial situation, you don't understand how to determine or discern whether or not this is good based on how your particular portfolio is set up, right? Let's keep going. Investors will not receive the benefit of regulations provided to real estate investment trusts or investment companies. We are not a real estate investment trust and enjoy a broader range of permissible activities. So we had a guy on this YouTube who has essentially bought a marketing license from an organization that has no state or federal regulations and said that Tulsa was a real estate investment trust. No, it's not. It is stated in the document. They are not a real estate investment trust. This is not a syndication deal. This is a crowdfunding deal. They could have crowdfunded anything. They just crowdfunded a real estate deal. They could have crowdfunded a company where they build a product. And they say, hey, you'll get back a percentage return if we meet this particular threshold. They could have crowdfunded a movie. This is a crowdfunding deal that was available to non-accredited investors. That's all this is. That's the structure of the deal. What else they put into it, as long as it's not illegal to do, doesn't matter what it is. They probably could have done a marijuana farm because the feds don't like marijuana. But as long as it's not illegal to do, it doesn't matter what they put on the back end of the deal. This is a crowdfund. It's not a REIT. So this is why I continue to encourage you, learn how to read these things on your own. But it comes again to this particular thing right here, right? For most people. Lack of reading and reading comprehension, right? If I don't like reading, so I never really learn how to read effectively, and then I never learn how to comprehend what I'm reading, they can put the information right in front of you. You don't know what it says anyway, right? Because, of course, he has to market the fund. That's the only way he can make it appealing to people. Because if he would just came out and be like, hey, man, I want to buy real estate in the urban environment and just break out all the financials and yada, 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 most people wouldn't have got involved in that. Why? Because there's nothing entertaining about that. Where's the entertainment aspect of it? I need to be entertained. So because the numbers aren't entertaining to people, I can't come at it from that angle. Because that's the angle I would have came at it from. So I probably would have raised, $1,000. Right? But he was able to raise $11 million or $14 million or $15 million because why? He made everything entertaining to you. Big launch, big release, everything was entertaining, which is what brought people in from people who what? Love to be entertained. Love being entertained more than anything else in the world. Right? Entertain is their God. So it worked. Not mad at nobody because everything's in the documentation. He didn't lie to nobody about nothing. Let's keep going. Detriment of offering price. Our offering price is arbitrary with no relation to value of the company. Our offering price is arbitrary with no relation to value of the company. Our offering price is arbitrary with no relation to value of the company. They just came up with a number because there were no assets. I think they had $15,000 in cash in the company when they started this company. So where he got that every share is worth $500, who knows? But see, this is something I've seen, and GC can speak to this too, because he come out of the startup space, especially the tech startup space. I've seen a lot of tech companies that just have intellectual property, they're pre-revenue, and they're doing offer. They just have an idea. So again, this is not abnormal in the startup space. It's not. It's abnormal to people that don't know how markets function, right? I've seen people. There was I think their ticker is QS. They was a company that was supposed to make batteries in the EV space. They went public with no battery. So what did they go public with? An idea. They was able to get money from Bill Gates. He has a portfolio of companies that he invests in. They got money from Bill Gates. They use that narrative that we got money from Bill Gates to go public to get money from other people. They had no product. So what is the valuation of the company with no product? No, it's no valuation. They just came up with a number. And people decided based on what they believe this particular company could accomplish, we agree with the valuation. So this is not abnormal to value something from an arbitrary standpoint. You see it in the tech space all the time. It's very normal to do this stuff. They just maybe have intellectual property, but I've seen pre-revenue tech companies go public with no revenue. And everybody telling me this is the next big thing. Well, how come they haven't made any money? But right now is a great time to go public because the market may be hot. You're going to see this in the AI space. You're going to see a lot of companies go public as AI deals, and they're going to be pre-revenue deals, and they're going to go public. They're going to actually go offers. It's how this game works. So why am I mad at Jay for doing what is already the pretty much how people do things in this environment, right? They put an offer out there. If you paid $500 for it, you know what you told Jay? You believed it was worth $500 because you paid for it. So that's what you got to understand. This is how this game works. The only way for you to know any better is to understand what's going on around you and be able to read what the actual document says. But then we go back to reading comprehension. Let's keep going. Keep running down. This might be 200-page prospectus. So they make sure they make it real long for the people that don't want to read. So deal example, potential exit strategies. They're not kind of describing how they're going to kind of operate this business. Exit strategy 1, potential exit strategy. So the first option is once the properties are renovated, company may elect to sell properties at market value, leveraging the home buyer education programs and the manager and its affiliates. There may be an opportunity to leverage federal first-time and neighborhood home ownership grants if such opportunities exist. Exit strategy 2, which is going to be their preferred strategy. The company may elect to rent or lease option properties it purchases and renovates. This is the company's preferred exit strategy. Additional strategy, the company intends to seek out federal, state, city grants that support home buyers' education, promoted landlord benefits, and opportunities such as cash flow, leveraging rental income to live for free, other homeowner incentives, right? Their preferred strategy is what? To buy it, to rent it out, or was it probably rent to own? Right? So they're going to renovate it and rent it out and try to cash flow the property. They own the physical asset, they cash flow. Just a basic real estate play. There's nothing really elaborate here. And it don't have to be because real estate is really not complicated unless you make it that way. Let's keep going. Exit strategies. The manager does not have an exit strategy as it intends to operate the company in perpetuity. If I pronounce that correctly, members should view investing in the company as a long-term investment with the ability to withdraw only within the policies outlined above in whatever that particular statement is. They haven't put that there yet because this is the pre, right? So it's telling you that members should view investing in the company as a long-term investment. He's telling you that the 8% may never come based on liquidity. So why would you go into this particular deal, right, without it? So Tone, what we're going to do is we're going to do the same thing. We're going to put you in timeout because it's not BS because you don't like it. That doesn't make the deal BS. So once again, I want to encourage you when you come in, talk like we're having a finance discussion, right? Because just because I don't like a deal, don't make the deal BS. Just means I don't like the deal, right? So that's what I want to encourage everybody to do, but especially my men. Look at it from a financial standpoint. Don't look at it the fact that you have an emotional response to it because that don't have anything to do with numbers, right? I want to really encourage all the men to do that. We're going to let the women be women, but I want to encourage all the men to look at it from a financial standpoint. Because if the men doing what the women is doing, the question I want to ask you, what the women going to go do? Okay, let's keep going. So this is not abnormal. Crowdfunding for businesses is not something that's abnormal. Here's a particular article from the Wall Street Journal, right? Stated from July 13th, 2023. As small bank lending tightens, we know the rate of capital, the cost of capital is very high now. Small businesses turn to customers to raise money, okay? As it gets harder for small businesses to lend conventional loans, many of them are turning to their customers as a source of funding. Using a relatively little-known financing tool, businesses are able to sell bonds to hundreds of customers and community members, right? These businesses are capitalizing on regulatory change that lets them solicit investments from non-accredited investors. Those are relatively modest income and assets. This particular San Francisco business called Palm City Wines, right, was set out to raise $250,000 by issuing a small business bond in April, right? Within 5 days, Palm City Wines bond, which pays 9.5 interest on customers' investment monthly over 5 years, was oversubscribed. The company raised $400,000. They did it via crowdfunding. You may look at this deal and say, you know what? I don't like 9%. It's not a good deal for you then. You may look at this deal and say, you know what? I don't believe they're going to be able to pay this bond back. It's not a good deal for you. Doesn't make the deal BS. Just means it's not a good deal for you based on you being able to answer that initial question. So this is what Jay did is not abnormal. In fact, he probably was kind of early on what he did, but it's not abnormal. And you may see more and more of this, but the question is, are you around the communities of people that understand how to even evaluate these type of deals? So we're going to go back to the questions, right? We have an audience, in my opinion, that's lazy and thinks they can get rich passively as a stage one family. And we talked about this before. Many of you at stage one financially. What do I mean? Nobody in your family has really figured out how to be financially successful. They don't own a lot of assets, right? That's not a negative. It's just the reality of the situation. Many of us, because of our experience in this country, we're behind a lot of other people economically. Then we have a lot of bad programming, right? That doesn't allow us to really understand things properly. So even if we get the information, we got to kind of deprogram ourselves because the programming is really keeping us from moving on the information. Okay. And that's something that we really need to start trying to deal with. So many people, they don't want to do any work and they think they're going to get rich passively as a stage one family because that's to me, the only person that this deal would appeal to. And I don't think it's a negative deal. I just know who's the good market for this deal. It's a person that don't want to really do a lot of work. So they hear 8% return, 50-50 profit split, and Jay's going to do all the work, and all they got to do is just sit back and collect the money. And then when that doesn't happen, now they mad at Jay, right? But it wasn't a real estate syndication deal. It was a crowdfunding deal that they attached real estate to. That's what it was. And if you actually look through the prospectus, it explains to you what are some of the limitations around this particular deal. So then you got to determine based on me being able to answer that particular question, right, whether or not this is a good deal for me. You can take Jay off the table and just look at the prospectus. And you should have the ability to do that. Take him off the table. Just look at the prospectus and say, hey, you know what? Based on how this thing is structured, does this deal work for me? But if I'm thinking that as a stage one family, so let me explain something to you. People that are investing in hedge funds, their family's not at stage one, right? Their family's not at stage one. People that are doing a lot of private equity deals, their family's not at stage one. So they can hand their money to somebody else and those people run their money for them. They're not at stage one. If you're at stage one, that's why hedge funds don't come after you because you're at stage one. They know you're ill-equipped to be in that type of deal. You can't handle being in those type of deals. They know you're ill-equipped to do a lot of private equity deals. You can't handle that. You can't handle a PE deal. You're just ill-equipped for it. You don't have the psychological profile. You don't have the comfort level to be in those type of deals, right? Because every deal is not going to work. So if you're in one deal and the one deal you're in has to be everything for you, and then that deal doesn't work, you're going to lose it. So you're not a good candidate for this type of deal. So those type of deals are for families that are above stage one. So as a stage one family, what I want to really encourage you to do is learn how markets function and take the responsibility on yourself to learn this type of stuff from the ground level. Stop thinking somebody else is going to do it for you because they're not. The game of this country was for us to never learn this stuff. That was the game, for us to build it for everybody else, but never learn it. That's why nobody comes to teach it to us, because we're not supposed to know, right? They teach us to be consumers, but they don't teach us to really understand this stuff. So then the people you think are really teaching it to you, they're not teaching it to you, right? Because what the black PhD should have done was taken a prospectus and broke it all the way down, but he understands his audience is lazy. His audience is lazy. So we have a bunch of people on YouTube with lazy audiences, and so they're just looking for the thing that, you know, I can try to move like I'm a multi-millionaire investor, but really I make $35,000, $40,000 a year. Don't work that way at your particular pay level. You got to put a lot of work in. You got to build foundations. You got to build systems. And until you're willing to do that, nothing's going to change for your family, right? Now, you'll be entertained. You'll have a lot of sex. You'll have a lot of drugs. You have access to food and water until they cut that off. But nothing's going to change for your family, because nobody in your family has decided that they're going to make the change. Everybody's just cool with status quo. And nobody's going to come save you out of that situation. It's not going to happen. Let's keep going. So here's the solution, right? Learn how markets function. Take capital management seriously. That's the best thing you can do. And you may be on a certain scale, and you may get it from this level to this level, and then you hand it off to the people that's after you, and they take it from this level to this level. But somebody has to make the start. But none of this ever changes is that if you don't do anything. So none of that ever changes. So if you don't do something to make the change and you just get caught up in what's going on, nothing changes. If you can only have a conversation about Jay Morrison's past and you can't talk about the markets, nothing changes. Nothing changes for your family. So what you're telling me is that I'm cool with being where I'm at. I'm cool with you being where you're at too. I'm also cool with leaving you where you're at. I don't have no problem with that, because I was a person that spent years in Tampa trying to tell people certain stuff, right? And they just weren't interested. And I let it frustrate me. And what I should have did was just let those people by themselves. I don't have no animosity for them. They just not on what I'm on, right? But we're going to get this kind of separation in the world. We're going to get more economic segregation. A lot of these narratives that you're getting politically are really about more economic segregation, right? You see in the state of Florida, man, they're going to make it to where if you don't make $500,000 a year, man, you're probably not going to be able to live in Florida. Unless, you know, and so everybody's sitting around waiting for the real estate crash. Well, what if the real estate market never crashes? How are you going to live there? So what we're seeing in America is that they're going to start doing a lot more severe economic segregation, which is what you see all over the world. Go to Africa. If you're rich, you stay in one part of the area. If you're poor, you stay wherever you can find somewhere to stay. Nobody's going to build any housing for you. It doesn't work that way. Go to Central South America, they run in the same game. This is what is coming to America. So I have been very passionate about trying to get our people and trying to get anybody that'll listen at this point to understand this is what is coming. This is the plan they're going to run. And a lot of people are going to get left behind, because when somebody was trying to tell it to them and actually get them the education, everything else is more important. Then they now think, well, somebody's going to come save me. I'm going to invest in this real estate fund, and this real estate fund is going to come save me out of poverty, because over the past 25 years, I've done nothing to educate myself in the situation. It don't work that way. That's like the person going to the doctor and they abused their body for 30, 45 years, and now they think the doctor going to solve their problem with a pill. Don't work that way. It doesn't work, because now you got to spend the next 25 years trying to reverse everything you've done to yourself. That's what people don't understand. But because people don't understand that, that's how the system keeps operating. I think that's going to be about it. We're going to get up on out of here. So again, Jay Morrison didn't scam you, scam yourself, right? If you invested in this deal, you didn't understand what was going on. You didn't read the prospectus. You didn't actually read all 200-something odd pages before you put money with this guy. He didn't scam you, scam yourself. Jay Morrison is taking a bad rap for this. I'm going to talk about nothing else, because I don't know him for nothing else. But for this particular structure right here, he's taking a bad rap because he presented all the information to people ahead of time. The information is public. He has to do that. He has to promote what he's doing to get people to buy into it. And after he presented the information and the deal went bad, people blaming him when he told you from the gate, this is how the deal was going to roll. So if you don't like the conditions of the deal, why did you buy into it? What did you think was going to happen? And none of those people can really explain what they really thought. They were embarrassed to say, hey, I thought I was going to get 8% every year. But the deal don't say that's what's going to happen. Right? The deal does not say you're going to get 8% every year. Right? Doesn't say you're going to get 50-50 profit split. That's nowhere in this perspective, that 50-50 profit split. I don't know where they got that from. Okay? So that's pretty much all we're going to talk about. Again, if you disagree, you can come on live. That's if you disagree. But I put out the challenge, not a challenge, because I think people take this the wrong way. But I put out the offer, top of the year. If anything market-based you want to talk about, come on the show. You bring the documentation, we can have a conversation about it. One person took me up. Now, I'm not the smartest person in the world, so I'm trying to figure out what's going on. Right? So, again, the reason why I'm going to keep talking about this is because I'm 100% convinced you not having an ability to function in this space is an impediment to the progression of your family. And it's something you should take serious, the same way you should take your health serious, the same way you should take your food serious, the same way you should take your relationship serious. But this piece is what's missing. And I'm not talking about the entertainment part of it. I'm talking about you actually being able to read this stuff and understand what information, because none of this, when you look at the prospectus, none of that's really complex stuff. It's very basic. The math is very basic, but most people can't understand it. Right? So, like I said before, you disagree, come on live. We're going to read these comments. We're going to get up on out of here on Saturday. And don't be bashful. You know, we had a lot of people trying to hit up the chat. Just jump on the live stream. But let's talk about the actual structure. Let's talk about the actual market that you're supposed to operate in. We should get the same amount of attention for that. We want to start talking about relationships and women and stuff and men and what they're not doing. It's weird. Once again, the most impressive thing this enemy has done is taking the people that built the strongest economic engine in the history of the world. And the same people that built the strongest economic engine in the history of the world cannot even have a conversation about economics. That is one of the most impressive things the enemy has done. Because I don't even know how you do that. Because I would think if you did it, you would get acclimated to what was going on to where you could even understand it. Can't understand it, but I built it. It's weird. It's like somebody building a car but can't drive it. You would think the people that built cars could drive cars. It's the weirdest thing in the world, but it's very impressive that they've been able to pull that off. Right? While they built nothing and understand how to actually operate the system. It's crazy. It's a cold game out here, man. TJ never left, man. Appreciate the $2. Business Talk with K, man. Appreciate the $5, man. Erica Williams, Classic Clown Spark from Money, $2. Facts on facts, folks who can't read. Yeah, I heard it's around 130 million Americans reading at 6th grade or lower. It was very unfortunate. Ray Gun, man, appreciate the $2, man. God bless my mother for teaching me how to read. God bless my mother for teaching me how to read. I went into grade school already knowing how to read. Right? So when I sat down and read for them, they was very much surprised that a black male could read at the level I could read it. Because I went into 1st grade already knowing how to read. I didn't go in hoping they was going to teach me how to read. I already knew how to read going into grade school. Appliance Boot Camp. Appreciate the $20, man. The crowdfunding I participated in the past. They gave me property addresses and business projections. I knew what my money would be turned and payout. I never saw any of this from the Tulsa Fund. 100% correct. But if he doesn't give it to people and they still put their money in it, and they found we're not getting it. Right? Just like some people invested in a particular company called QuantumScape, and the company had no product to take to market. And they still invested because they were fine with investing in a company with no product. So if they do full disclosure, and after full disclosure, you still want to move forward, they've done full disclosure. I don't see what the issue is. Right? And I think that's what a lot of people, they're mad because something didn't go the way they wanted it to go, but you got full disclosure up front. Ron's, appreciate the $9.99. I appreciate your analytical approach to every topic you've addressed. Any resources you recommend to improve critical thinking and reasoning? I couldn't name any off the top of my head, but if I can think of some, I'll get back to you. Appreciate the super chat, though. So, Locks Vegas, $9.99. Preach, Dave, nothing but the truth for a minute. I appreciate everybody for the super chat. So, once again, man, if you disagree with anything I said, come on and talk about it. We're going to talk about, like, the markets, the structure. Come on, don't be bashful, right? Anybody that comes to him, I'm very respectful to him, even if I disagree with him, because it's not about that, right? This is not a debate show. So don't be bashful. Because Jay Trent's real. A lot of people really emotional over this dude. And to be real with you, man, nobody has a problem with this guy, right? You don't have a problem with this dude. I know that and you know that, right? You just emote. Like I said, man, y'all taking the woman's job. I don't know why you want to do that, but that for some reason, that's what you want to do. So she don't have a job because you just emoting all the time. And I'm not trying to be a chauvinist, but a lot of y'all dudes, man, y'all emote a lot. It's like it's bad, bro. It's not a good look for you, homie. Right? Not saying you can't show some emotion, but a lot of what y'all do, man, it's not a good look for you, dog. It's really not. You know, when you get in certain leadership capacities, you got to kind of guard how you present yourself because people lose confidence in you, bro. Because they looking at you to be the rock. So you can't be all over the place with stuff, man. Like this is old school leadership skills. If sometimes, man, as a leader, if you feel a certain way about something, you got to go by yourself and deal with that. You can't do it in front of everybody. Why? Because they're going to lose confidence in you. This thing, everybody just so over the top about everything. It's not a good look for a lot of y'all, man. I don't think y'all realize that, right? I know you need healthy outlets, but this over the top stuff about somebody that's in the environment, you know, where I'm from, man, if you really got a problem with somebody, man, you get to it. You don't just talk about it all the time. So I don't understand what the deal is with this shit. It's just weird to me, bro, but it's some internet stuff. You know, so you don't really have a problem with this dude because Jay be moving and he don't have no issues. So I know it's no problem. Dude lives in Atlanta. This is a very violent city. He don't have no issues with nobody. Why? Because don't nobody have no problem with that dude. It's just internet people, right? This is a very violent city that we live in and nothing happens because why? There is no problem with this dude. I don't have a problem with this dude and nobody really has a problem with this guy. They just use him because a lot of dudes who haven't really been taught how to properly govern themselves emotionally, it gives them something to direct their anger at. But they're not mad at Jay. They're mad at their life. Jay didn't create your life for you. You created your life. So you need to go look at yourself in the mirror, right? Again, anybody want to come on, talk about it? We're going to read these comments. Maybe we're going to get up on out of here. So Todd says, I remember Tone Talks tried to break the stuff down. Folks said he was being a defeatist hater. Oh, yeah, I remember that. But Tone Talks to me didn't really go into the structure of the deal. And Tone is an attorney and he can understand things from a legality standpoint. But I think the way he came across is, again, like you got an issue with the guy. And I'm not a fan of that. You know, I'm just really not a fan of this taking people and trying to destroy them because you may not be a fan of something that they're doing. But then if I put you and that person in the same room, nothing would happen. So it means you really don't have no issue with nobody. Right? So he did kind of break down what he didn't agree with it. But a lot of the way in which him and that little crew over there go after people, I'm not a fan of that because my thing is that if y'all not going to do nothing to nobody, just like stop it. You know, that's just me. Because where I come from, man, things really happen. So it's triggering to me to have everybody feel like they got so much animosity for somebody else because in my mind, I'm thinking something's going to happen. I can't comprehend that all these people just doing this because it's WWE. So that's something I still got to work on this internet, just realizing, man, a lot of these people just doing WWE because in my mind, I think this person got a problem with this person. It's going to end up with somebody being dead. And I got to realize that these people don't play them type of games. They just play what's going to allow me to trend on the internet right now today. So let me talk about that. But in my mind, because of my experiences and how I came up, I'm thinking these two people got a problem. It's going to end up with somebody being dead. Right? So reason why I didn't really like how Tone did it was because the energy he came at the dude with, I don't think that was appropriate. Because like I said, if I put Tone and this dude in the room, ain't nothing going to happen. Because they're not on that. So to me, just cool, keep it calm, keep it to the content, and let's keep it pushing. Because all of the beefing, and then a week later, we sit down and we talk about how, like, that's WWE, right? Because if they're really your enemy, dog, you don't do peace treaties with your enemies, man. In real life, at least where I come from, we don't do that. But appreciate the comment. So the rich dad author states, how soon will I get my investment back? Is a question to ask before investing. Now, Katrina, I like that answer, but here's what I believe the answer is, right? From my own opinion. Anytime I go to invest, any financial situation, before I invest, I'm coming in with this particular narrative, right? What is the acceptable rate of return on capital? Right? What is acceptable rate of return on my capital? Now, risk comes into that, right? But what is acceptable rate of return on my capital? So if I'm going to invest $10,000 with Jay Morrison, what is acceptable rate of return on my capital? I don't care what he says he's giving out. So I probably should have put this in a discussion before I did the questions. I don't care what he says he's giving. The question is, what have I determined is acceptable on my capital? And I think a lot of people, because they had never been in financial situations, they haven't really been taught how to evaluate things financially. They don't know how to answer that question, right? What is acceptable rate of return on my capital? And so if you come in asking that question, see, people talk about, well, what's the ROI? That has nothing to do with what is acceptable rate of return on my capital. That got nothing to do with, as I said, people say this stuff, they don't know what it really means. If I'm going to put capital in the market to get a return, what is acceptable to get that return? So one of the ways, and one of the reasons why I created this particular PDF, let me find it real quick, is because I wanted people to understand how to answer those type of questions. Because many people are in deals and they've never asked themselves this question. So what they do is they get told what the return is. That has nothing to do with whether or not that's acceptable to you. And then based on what you determine is acceptable to you, then what risk are you willing to take to get that return? Now we're having a finance conversation, right? So I may decide, you know what, putting my money in an index fund, getting 8 to 11% before the rate of inflation is an unacceptable return on my capital. I'm willing to go buy bonds in the emerging market. They're going to get me 15%, and I'm willing to take the risk because I'm willing to take risk, there's a premium on the risk that I'm getting for taking the risk. See, now we're having a finance conversation. See, most people can't have that. So they just get put into deals and the person tells you, well, it pays out this. That don't have anything to do with what I'm looking to get returned on my capital. So one of the things that I'm very passionate about is teaching our people how to function as capital managers. I don't care if you got $2, right? How did you, so what's weird is that you go into the relationship space. People will say, here's my criteria for a partner or a mate. Got this deep criteria. Okay, cool. What's acceptable rate of return on your capital? Can't answer it. Okay, well, person will give you a number. Where do you go to get that return? Also can't answer it. So they never thought about this. They just saying numbers. So I see this all the time when I talk to traders and I say, well, what are you looking to get return on this particular trade? They give me a number. Okay, what are you willing to lose on this particular trade? They give me a number. Okay, then what particular scenarios are going to let you get that number back? And they never thought about that because you're not supposed to think about that. You're just supposed to put your money with another group of people and let them run your money for you. And whatever they get back, they get back. And you're supposed to believe that in 40 years, I'm going to be a millionaire. Well, you may be and you may not be. But it doesn't matter what happens. You don't know how you got there. So then you can never teach your children how to get there either because you don't know how you got there. You know how you got there by giving your money to another group of people. And we need to get into that conversation about why we've assigned this one group of people to manage money for us, right? As if we can't manage our own money and they're so good at managing money and we need to just let them manage all the money. But that's a whole other conversation. I get into that, they'll take me off this YouTube. So that's what I want people to understand is that most people cannot tell you what's acceptable rate of return on their capital. You're in a 401k. What is a 401k returning to you? It's returning X amount. Well, when did you decide that was appropriate for your capital? So then it rolls back to, I don't know anywhere else to put my money. So your real problem is you don't even know where to get returns on your money. So that's why them dudes that gave their money to that dude out of Philly, right? And a lot of them gave him street money. They don't want to say that, but I know what it is. They gave the dude street money. And because they don't know what to do with their money outside of street money, They give it to him because he tell them, he used terms like flip and all this type of stuff. So they think, well, he gonna get, because that's what they think they're gonna do. And they never determine, well, what was acceptable return on my capital before I give it to this guy. They just hoping he turns it into money because they think he gonna flip it. Well, one, most people don't flip their money on the street. That's false, right? That's false. Most people don't flip their money on the street. So you set yourself up for this again when you don't even understand how these type of deals work. So when somebody comes to you and say, hey, we got a real estate deal and we can get you 8% year on year, and you think that's like a weak return. Well, it's really not in real estate. It's really a great return, especially if you get to keep the asset. But when you don't even know what returns look like, you just think that's like a weak return because somebody's over there getting 400% on NVIDIA. But NVIDIA could go to zero. It's very unlikely the real estate goes to zero. So this is why I say we can't have the financial conversation. We're just very ill-equipped for it, and everybody knows it. So people with a little bit of game in this area are able to come around us, regurgitate a bunch of terms and words. You think that person's saying something. They look in your mind how you think a successful person looks. And because I'm a stage one person, I don't want to do no work, I get taken advantage of. And now I'm mad at somebody that gave me all the information before they did anything. And now I'm mad at them, but I'm really not mad at them. I'm really mad at my life, right? And this is something that Ray Gunn said he 100% correct. Dude be out. Dude be moving around. So I know nobody don't have no problem with this dude. Atlanta's a very violent city, right? If somebody in Atlanta wants something to happen to you, it's going to happen to you, bro. This is how I go out here, man. They not playing no game. Ain't never been playing games in Atlanta. Don't get it twisted, right? Coach Malik Carter talked about it. He used to come out here. He went to college in the Carolinas, and he would come down to Atlanta. We talking about late 90s. Man, they ain't never played in this city, bro. If somebody in this city want to do something to you, man, it's going to happen, right? So once we get off the internet, don't nobody have no problem with this dude, bro. He just good for, it's a sector of YouTube. They respond to this guy real well. They ain't got no problem with this dude. They ain't got no problem with it. He know that and they know that. You put them all in the same room, ain't nothing going to happen. So if you had a problem with him and that's your enemy, if you get next to him, you're going to do something to him. The reason why you're not going to do nothing to him because you ain't got a problem with him. Because them youngsters up there in Chicago, when they get around each other, things start happening. Why? Because that's their real enemies, right? They really enemies. So when they get around each other, things start happening. Don't nothing happen with y'all, right? Because why? Y'all don't have no problem with nobody, man. Y'all ain't never had a problem with nobody in your life. Let's keep going, man. So Roscoe says he oversold it. I wouldn't say he oversold it because he raised $14 million. So to me, he did a great job of selling it, right? I probably would have undersold it and raised less money. I don't think he oversold it. He did his job. His job is to bring money into the fund, right? That was his job. It's a crowd fund. So all crowd funds operate the same way. And a person can invest in a crowd fund to create a product and the product never gets made. It don't make the person cheated them. They invested in the idea that this person's going to make this product. There's no guarantee they're ever going to be able to make it. So LG, I didn't see that in the document, but if you can point it out in the document, come online and I'll find it in the document. But I don't see anywhere in the document where he says he's going to pay himself a $500,000 a year. So once again, is that I want to encourage people to fall back on the documentation, not on the he say, she say, because I didn't see that nowhere in the document. But if it's in there, you can come on live and we can find it in the document and I'll stand corrected. Because I mean, I don't catch everything. That's why I got people around me to catch what I'm missing. So Anthony Russell says his question is risk. Some people look at risk. To me, I look at what's acceptable rate of return on my capital. Then based on that, I determine what's the risk, right? But everybody look at it different. Risk is not a bad answer, right? GC says risk. So a lot of people look at risk, right? Katrina says, what's my minimum rate of return? So yeah, I look at what's the acceptable rate of return on my capital. Then I base everything based on that, because that will determine how much risk I'm willing to take. So if I'm willing to try to get 25%, I'm willing to take more risk because I know that 25% is such an abnormal gain. I may have to take on more risk. If I'm looking to get, buy a treasury and get 4% over the next 6 months, I can get that guaranteed. Right? So that's why with the Tulsa, you're getting 8%. Now at that time, you couldn't get 4% treasuries. But right now you can get 4% over the course of a year, and you're taking on no risk because it's a risk-free rate. It's a guaranteed, it's a bond. So you can get 8% over the year buying U.S. treasuries. You got to take on no risk. So I know a lot of people that are doing that now. They're not even in the markets. They put all their money out and bought treasuries because attitude is, I'm going to let this market play out, and I'm going to just get 8%, and I'm gone. And you can do that. If you can get enough capital, you can just buy treasuries. That's what a lot of NFL players should look into. But they don't have the right people around them. You don't have to take any risk. You can pool enough capital, especially in this market, just go buy treasuries. Because if the rate falls, the treasury will pay out more. See what I'm saying? So I would take a certain segment. If I'm what's the dude name? Lamar Jackson. You signed that big deal, I would try to run and buy as many treasuries as I could. They were selling our bonds not too long ago, paying out 9%. Right? Because the government's going to pay you out. You ain't got to worry about that. Right? And so you don't have to put your money at risk, and then you can not have all your capital get eaten up by inflation. But I'm not a financial advisor, so I can't advise you on where to invest your money. So GC says, Kathy lost all kind of money. I don't see nobody calling her a scammer. 100% correct. Don't nobody call her a scammer. But we don't call people like that scammers. That's how we've been programmed. We ain't going to never say they scamming us. We ain't going to never say that. They scam you right in your face. So Mika, man, appreciate the $5. Erica Classic Climb says, YouTube, because entertainment world, seasoned New Jersey people in New Jersey reached out to folks. They took them videos down ASAP. You 100% correct. Show did. Took all them videos down. Jay can pivot and be fine. I think he can run another fund. I think he can do another raise. And what people got to understand is this, and I think this is the larger context. If somebody doesn't go back into these environments and buy this property up, nobody's going to do it. So if you don't like Jay doing it, who do you like doing it? So let's say we take Jay off the table. Who do you want to go do this? There's a guy in Houston. Somebody hit me to him. He's buying up I think it's the 5th ward or the 4th ward, one of the wards in Houston. It's a real low-income area, right? Over there by Cashmere Gardens. All my H-Town people know what time it is. If Jay doesn't do it, then who does it? So the guy that's in Houston doing it right now, he might have even been on Erica's channel. He not doing hella YouTube because he just really, he neck deep in the real estate game. Again, how come y'all don't know who that dude is? So once again, y'all got to be entertained. Everything got to be entertainment. Jay understood that. Jay know y'all better than y'all know yourself. So we understood I got to add the entertainment piece to it, have the big launch, yada, yada, yada. And that's going to get y'all to believe it's real. Because if I just launched the fund and tell y'all, hey, man, here goes a prospectus, read it and get back to me, and I have my people follow up with you, you won't get excited over that because it don't seem like it's the move, right? It's not where all the attention and all the clout is at. And so he understood that. So what I'm going to do is I'm going to make this thing seem like it's the end thing to be. A lot of y'all still doing high school all over again. You trying to be in the in crowd and make it seem like that's what it is. And now you want to be part of it. That works on people, right? Because to me, the whole thing like a big MLM. But MLM stuff work on people. Because why? People don't join the MLM because they want to make money. They join the MLM because they want to be part of something. That's why they join it. They don't join the MLM because they want to make money. Most people don't want to make no money. Quiet as kept. We're going to tell the truth today on the Saturday. Most people don't want to make no money. So Appliance Bootcamp says some of the people that crowdfund without any hard asset tied to the fund, i.e. real estate, they sign a PG. So I don't know what a PG is to get your money back, but if it fails, you aren't guaranteed to get any money. So Katrina says, hubby saw the rap video, was like, no, I feel you. Yeah, Jay been around a minute. I remember I first seen him on World Star Hip Hop. He been around a minute. And I remember when he launched the school. So dude been around a minute. Right? He not a newbie. Exactly. Jesus said AI companies raising 10 million with no product. 100% correct. Right? Not just no revenue, but no product. I got his idea. And they'll go do a capital raise. And they'll get money. They'll raise millions. This is not like, I don't think people realize this. It's new to y'all because y'all ain't been around it. But it's not, this stuff is not new, especially in tech. It's not new, right? Most tech companies are just ideas. Somebody just got a good idea that they never figured out how to make money. So Erica says, taking asset management classes as we speak, never stop learning. Most definitely, you can never stop because there's always something else to learn. So Mika says, beyond the image beatdown, the stigma has an effect that a perception that black men should be managers of capital can be detrimental long term. I don't really understand what that means. So Ron says the way you stay on task, refuse to entertain off-topic ideas, is a lesson in itself. Yeah, Ron, I was a person when I was a lot younger. I would get distracted very easily. So I would start something, do something else, start something, do something else, start. And what I learned is that my success formula is I just got to stay focused on what I'm doing. And if I lock, so I move a lot slower than other people because I'm working through what I got going on. I'm not getting distracted. So I learned is that that's part of my success formula. So one of the things I learned, and it took me a long time to learn it, is how I actually learn information and how my brain like deals with information. And part of that is just staying really focused. So when I was in college, I would take the book and they'll say, we're going to get tested on chapters 1 through 8. I would go home and with a notebook and paper, I would outline all the chapters. It took me hours to do it. But by me outlining all the chapters, that's how I would learn the information. Now, my mother told me to do that when I was in grade school. I didn't want to take the time. So I didn't do it. So it hurt my schoolwork. So people would be like, yeah, he's smart, but he not getting good grades because he not doing the work. I didn't want to do the homework. Once I made myself sit down and lock in on what I was doing, I was like a high B, low A student all throughout college, right? And I didn't really try that hard, but I just was real focused. So while everybody else was doing this, that, and third, I just was focused. So I learned like that's my success formula, and I just stick to that. And I don't let nobody come and try to get me off of that because they're not going to be the reason why I'm not successful, because they're not successful and they trying to get me to join them and not being successful. And that don't help me. So I just stay locked in and I don't allow nothing that I have control over. Some things I can't control. You can't control health sometimes. You can't control sometimes what somebody's going to do to you, but you can often control what you allow to come into your environment and get you off your focus. And so I'm very discriminatory about what I allow to do that because my success has been based on staying focused, staying locked in, and starting to realize that the majority of the world, they're worrying about something every 3 minutes. And they need life to work like that for them to feel content. And at the end of the day, they don't have nothing. Right? And so you can't even help some of these folks because they've conditioned themselves to where they need so much stimulation all the time. They're like a crack addict. Right? And one thing about a crack addict, man, is that they're going to smoke crack, man. It don't matter what you do. And the thing about a crack high is it's a very short high. So as soon as they smoke, they come down and need some more crack. They come down and need some more crack. That's what made crack so bad. Because the person was always fiending for it. That's how they got a lot of these people with this internet and with this social media. They like fiends. They're always looking for that next thing. So it's rough. It's going to be rough on them. But, you know, God bless them. Hope it work out for them. Erica said, yeah, it's weird. It might be something in the food, Erica. I think that might have something to do with it. It might be something in the food. It might be something in the water. I was talking to my nephew about that the other day who getting ready to go to college. You know, because I told him when I was coming up, it was weird stuff going on. But I say this stuff I hear is real weird. But see, he not like that because why? To be very frank with you, man, it was a lot of men around him that raised him. So, he real, he real cool. He have, he young, he have his issues, but he just not over the top like some of these dudes, man. What a lot of men had to do, my nephew talked to my father every week ever since he's been a child. So he just always had men around him all the time. Like literally, my father has done that. He spoke to them every week ever since they've been children on Skype. So Aunt John said, my portfolio 70%. Good for you, man. That's a great portfolio. His portfolio is not doing 60, 70%, man. If they heavy in tech went stupid this year. And I ain't see it coming. So if somebody did, they up. So Erica says, a small hat manager everywhere at the NBA Summer Game. Yeah, I believe that. 100%. They're going to say close to that money. I believe that. So Chris Senegal, I think that's his name. Yeah, that's the dude out there in Fifth Ward. I think he's been on Erica's YouTube channel. So Mo Williams, appreciate the $2. ROC versus ROI. Great example of high comprehension, right? Erica, appreciate the $5 super chat. Chris is on my YouTube channel. And in the area, he's 80% of rentals owned by 5 families, 2 families Italian, 3 other families Jewish. Exactly. So that's the thing. Now, they not linking up with Chris now. Now, he really doing it. Because why? He ain't putting all that entertainment on top of it. Okay, so Chris says, PG is a personal guarantee. Okay, appreciate the terminology. I didn't know what that meant. I never seen nobody use that acronym like that. Eric says, one of the video guys about bipolar takes medication, plus he played football, some hits to the head. Yeah. We know now that CTE impacts people at earlier ages than what we initially thought. So I can get that. Because when Hernandez passed away, they did an autopsy of him. I think he was 27 when he passed. He had stage 3 CTE. He quit playing football at 24. And he already has stage 3. And that's a degenerative disease. So he probably would have been at stage 4, probably mid-30s. So we're seeing now that people that have extended careers playing football, I'm very glad I quit playing football after high school. But a lot of people, especially where I'm from in the South, they spend their whole life with that helmet on. A lot of them have CTE probably now. They'll probably eventually find a lot of guys got CTE already in high school. Because, where I'm from, they start putting a helmet on you 5, 6 years old. So you're getting head trauma your whole developmental years when your brain is very, very vulnerable. And then now you go into adulthood and a lot of that stuff can't be repaired. That's something that the Nigerian doctor realized. Once you get that damage, you can't reverse it. Even if you quit playing, this is going to always be something you got to deal with because it's an actual disease. So it's not something that comes and goes. It's like a disease. Once you get it, you got it the rest of your life. It's very unfortunate. They kind of squashed that documentary. They put a movie out of it with Will Smith, but that's a very powerful documentary he put out. But they're not going to really let that thing get no publication because why? It's bad for their business model, So what's on the screen, Miss Lady L? We're going to do this. We're going to get up and out of here. This is talking about not making the biggest mistake, investing the mistake of your lifetime. I'm trying to set it up to where this PDF can be given to you when you buy the course as a promotional item. I got to get with my tech person, figuring out how we can deliver that. But what it's really going to get you to understand is that there's 3 or 4 questions you want to kind of understand before you buy any investment. And if you don't ask those questions, you not understanding that can cost you thousands, if not millions of dollars over the course of your life. I want to go after people that understand your investing acumen needs to be greater than when I'm done, all I'm going to have is, and I'm not saying this from a negative standpoint, but I'm going to have a 401k in my home, right? If you're looking to get past that particular stage, there's certain questions you want to ask yourself. So there's nothing wrong with having your wealth and your 401k in your house. There's nothing wrong with that. But there's a stage past that. And once you start looking to go past that particular stage, there's certain questions you want to start asking yourself about investing. Because the reason why a lot of people fail at managing their own investments because they don't know how to ask themselves the right questions, right? And I'm not a financial advisor. I can't give financial advice. But what I can give you is the questions that anybody that works in finance understands to ask before they ever invest. But this is not something that's commonly known to the majority of the population because, like I said, they keep this information in certain communities and they never break it out to the masses. But when you get inside those particular environments, they start having conversations around these particular questions. And they're very common terms. Anybody that works in banking knows these terms, but they just never teach it to the masses, right? So that's what the PDF is about. We're going to try to make it as a deliverable with one of the courses. If we can't, we got to figure out another way. But I think my tech person may be able to figure out a solution to that. So big up to Miss Lady L for giving me the heads on that. Yeah, definitely play soccer. Look how much money they're paying Messi. And Messi's washed up. No disrespect to Messi, but he's washed up. He's not the guy he was at 25. But the thing about soccer, what makes it such a great game, is when you invest so much into the sport, into the profession, you can pull that money out as an older player. Same thing they did with Beckham. Beckham put so much into the sport young. I know a girl that's from his city. Went to college with her. And as he got older, he was able to pull that money out of the game. Because the money he got paid to come to the States, he definitely was not worth that from a performance standpoint, but he was worth that as a name and as a brand. See, so Messi is not anywhere near what he was at 25 years old. But because of his brand equity, he's able to pull that out of the game now. You cannot do that in football. The game of football on a professional level is about them getting all the value out of you and dumping you off. That's the game of football. Do some guys escape it? Yeah, Brady was able to escape it. But most guys never going to get out of that cycle, right? So football is really not about you being able to extract value out of the game as an older player. You look at running backs now, once you get 27, 20 years old, they're trying to figure out how they're going to get rid of you, right? So you work your whole life to play ball, and at 30, they done with your ass. So really, the money really is in soccer. The money's really in baseball. You know, Soto from the Nationals, he refused a contract. He was 24. They tried to give that man $400 million. So look at what the NBA players are signing for. And the NBA is going to be hard because most people are not going to be tall enough. But baseball, soccer, you don't have to be a giant to play those sports. You just don't. And I'm from a football region. But a lot more people will benefit from playing soccer. It's a worldwide sport. You can play it all over the world. And the kind of money they're paying guys is ridiculous. But Americans really not hip to soccer like that. Atlanta got a big soccer community because of all these Mexicans and Africans we got over here. But Orlando got a nice soccer scene because of all the Hispanics we got there. But a lot of people really not hip to soccer, and they're not hip to how much money's in soccer, and they're not hip to how long you can play it and still keep your health. You got to worry about blowing out your knee, but pretty much that's it, right? With football, you got to worry about everything, right? With basketball, you definitely got to worry about blowing out your knees. But it's just a different game. There's more equity that you can build as a professional. You can pull that equity out because they broke Messi off to come out here. And he's not, as a player, he's not worth that. We're not taking nothing from him. He's a great. But his performance is not what it was 10, 15 years ago. You just can't, at his age, do what he did at 25. It's not possible. But the money he's making, man, that dude, great grandkids, are never going to worry about nothing, ever. Because the deal he got, it's like an all-inclusive deal where he don't have to worry about nothing. All he got to do is just play, right? So it's a great deal. Yes, I would tell soccer, baseball. If I knew a young person, soccer and baseball, and just work on those. Because you don't have to be 6'9" to be successful, and you don't have to be 280 to be successful. You know, you can be a normal sized person and make it in those sports. And if you do make it, they're going to break you off. And the baseball contract's guaranteed. Football contract, don't think that's guaranteed as an upfront money. The rest of it they can take from you. Baseball, every year of the deal is guaranteed. It's just a different type of pay, you know, in those spaces. A lot of people are not hip to it. So appreciate everybody for coming through. Want to encourage y'all to stay safe. And I want to really encourage you to make capital management. Here's a solution. Learn how the markets function. Take capital management seriously. or just decide that you don't care, it's not important to you, and just deal with what comes with that, right? But it's not a good look, again, for y'all dudes to be on the internet emoting over other men and what they did, because I'm gonna tell you again, if you're doing that, what the woman gonna do? And you want to really ask yourself that question. Not saying that you can't get upset, not saying you can't show emotion, but these men on the internet just emoting all the time over other men with no real information and education and game coming to the situation. I really want to ask you, as a man to another man, if you do that, what the woman gonna do? Because she gonna act like you while you acting like her. I don't see how that's gonna work. So I want to really get y'all to really examine yourself. And I'm not saying that to be a chauvinist. I'm not saying that to be disrespectful. I'm just asking you from a real life standpoint, like how that's gonna work for you. What I really want to encourage you to do is focus on capital management and how you gonna get your family out of your economic position that they've been in the past 400 years. And you have the opportunity to do it inside the United States. You just got to get busy with doing it and stop being distracted. Y'all be easy, man. Talk to y'all later.